All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for February 20th, 2024. Start with the hybrid swing portfolio, as always. This is Alcoa. This is 30-minute charts. This yellow box represents today's price action. This is the high and the low of the day. Gives you a sense of how big the range was. The blue box is the 5-day range. This darker blue line and black blue line, that darker blue line, I should say, is a 10-day low, which tracks to the 5-day low as well. This red line in the middle is the 30-period simple moving average. It's the middle of the river. In other forms of this chart, we put Bollinger Bands around that. The orange line in the middle is a 10-period simple moving average with a half a period Bollinger Band on it. We call that the dragon. The PSAR is geared to this multicolor 10-period moving regression line. We treat that as the actual price, and the bars represent noise. The wicks of the bars represents noise. For us, the real price is that 10-period moving average. And then the thick black line is the 30-period moving regression line. And that one represents the health of the trend. And when the RL30 turns, that's always a significant moment. And when it crosses the simple moving average 30, that always signals a difference in orientation. So when the slope of the RL30 is down, that's unhealthy. The turning point offers some hope. And when it crosses the simple moving average here in the middle, then that's a signal that the downward bias is over and now we can have an upward bias. So the relationship between those two 30-period moving averages, one is slow, the simple, and one is fast, that's the linear moving regression line. Those 30-period averages are significant to us because it takes 30 data points to be able to think statistically about the data being represented by the dots and the prices. Having said all that, this was Friday's trade. And here's the gap down on Tuesday. 1, 2, 3 entry on a morning hook. And it gets as high as the PSAR and the edge of the dragon and then rejects. So we keep 0.5 R, half of what we risked with the standard risk. AI was a collapsing dragon. You can see that when we see the bottom of the regression lines here and the price location where the PSAR flips, that violation right there was key on Friday. And then the weakness continued with a gap down to here. That was the close. Here's the gap down. That sets the direction for the day. The PSAR is down. The 30-period moving average is down. The RL10, which is the price, is extremely down. The VWAP, which is this orange line, is also down. So basically it's going down. So we get short with our standard risk, and that thing moves 1, 2, 3, 4, 5 R to the 5-day low, this is a new 5-day low, and then reverses. And then where the price hits the edge of the dragon, so here's the dragon, that middle line is the 10-period simple moving average, and then the shaded portion is a half a standard deviation in the Bollinger Band. And when this comes back and hits the southern skin after the R10 reverses, that's our signal to get out. So we capture 4 out of the 5 available, 4 out of the 5 available R, give 1 back, and that gives us 4 R. And then it just stabilizes for the rest of the day. So that's what a 4-hour trade looks like, traded in the usual way. Caterpillar, also a big gap down, half an hour, same pattern. Cliff Natural Resources, we didn't get the big gap down, but we did get a bottoming and then a recovery. So this has a nice sideways price action along the VWAP. And then when it gets into the spine of the dragon and started to break out, I speculate in with one position. It runs up and then it comes back all the way down. So I preserve 1R. I was going to get out of that one anyway. I don't want to hold that over the overnight. So this was really watching to see, could it recover anywhere in here and reverse higher? It couldn't. So I preserved 1R. No overnight risk. CVS, this was caught a 2 to the downside because we have 3 descending lower highs. And when this crosses the Bollinger Band mean and the PSAR is already pointing down, we get short here with a standard risk box. It sells off hard. And then when it hits the edge of the dragon, we're out with about 0.5R. Standard work. DIA, collapsing dragon for half an hour. Disney, no trade. Devon Energy, no trade. The short side trade was available. We didn't take it. EEM is sideways quiet channel developing nicely here. Ethereum, this was a beauty. It closed on Friday here after this little shakeout run and then coming back. So it closed here after a nice run up and a pullback. And today it gapped up to here. It started taking off. So we got long here. It rolled over pretty fast and ended up taking a -1R. It sold off this far and then gave us a 1, 2, 3 entry for a re-entry. It never jeopardized the PSAR. So I speculated back in and that paid off nicely. And that gave us +3 and exited here. So I have no overnight risk. 3 pays for the 1, so it nets 2. And I'll make that set of trades every day, all day, no worries. Mexico, this was a big gap up, and this one here was the close, gapped up to here. It took off, it looked good. I scratched the first one, stopped in reverse because the whole market was rolling over. So we got short here, and that sold off hard all the way down to here. When the R10 bottoms out and forms that little sharp point, we exit at the edge of the skin of the dragon. And so that gives us that trade, and that gives us 3R. Brazil, no trade. China, collapsing dragon short for an R. The other China, MCHI, was the same pattern, so I don't like to trade them both. I trade the first one that moves. Intel, no trade. I like the way it closed. This is setting up for this little afternoon move right here was compelling because it closed above the peak of the VWAP, above the Bollinger Band mean. This all feels good. It's going to test this price tomorrow. If it gets above 44.75, that is a clear sign to get another position on. So this is one that'll be on my radar to look for tech leadership tomorrow. But no trade today. IP, we closed the 2-position swing trade that we had from last week, which closed here. This thing gapped up ran all the way up and then came all the way back. So we exited here on those two positions with that much risk. That was over 10R. That was nice. I thought about this one hard, elected not to take it. There was a tradable move in here. We just didn't get it. I didn't want to be short something that was that strong, although that's a legitimate signal. So we'll frame this up tomorrow. It closed at the low of the day right on the Bollinger Band mean. So that sets up a compound critical state to go in either direction with a tight risk box, and we'll play that whichever way it goes tomorrow. No directional bias. Real estate, no trade. Coca-Cola, this was a gap and go. It ran all the way to the top, came back, and we preserved 2R. I thought about the re-entry. I didn't take it. It would have paid off, but there was enough time in the day for that to work. But the whole market itself was still kind of weak, and I didn't want to speculate into Coke. Regional banks, no trade. They're declining. McDonald's, this was a COTA 2 re-entry for half an hour. Thought about the short. There wasn't enough time in the day to take it. Merck, gap and go. It had an explosive move up and then started selling off hard. I took it as it was approaching the VWAP to preserve 2R. Microsoft got short and there was just a fractional R available. Didn't really collapse. I missed the afternoon recovery. That actually looks positive for tomorrow for tech because both Intel and Microsoft are okay there. Marijuana, no trade. Nike, standard COTA 2 for an R. NVIDIA, big gap down. It collapsed below the previous belly of the RL10s. So that just kept selling after a gap opening up in here. So short, standard risk, capturing 4R on the reversal, and then taking the exit at the skin of the dragon. Clean energy, same trade, 1R. Rivian, thought hard about that one, but I already had enough shorts in, and it was span of control. No trade. S&P was weak and closed poorly. Treasuries stabilized. Tesla, this big gap down, got short, and cash 2 in the usual way. Walmart, this was a gap and go that scratched. I couldn't wait to get out of that trade, to be honest. That big gap scared the crap out of me. When it didn't follow through, I got out. I didn't have the courage to get short, but there was a short side trade available. But it did stabilize nicely, well above last week. So I'm going to treat this as a high priority for a really tight risk box like this. So you're talking about maybe a $2, actually a $1 box in either direction. I'll play the breakout above 177 or the breakdown below, call it 175. I'll use a $1 stop and then try to get my risk out real fast. So Walmart should be a mover tomorrow. It's definitely in play. US Steel, no trade. Sniper trade of the day. We're now on 3-minute charts. So this was a big gap up, sold off hard for the first hour and a half, bottoms out here. Now, when this price comes back up into the edge of the dragon, now, if we'd have been short this instrument, then the move to here would be where we exit because the run to the downside is over. That actually gives us the earliest possible entry here at the yellow dot. Could actually consider getting long right here. I waited a couple bars for the price to get through the spine of the dragon. I took that long, and then this is the standard sized risk box for that instrument. And now what I'm looking for is a return to the VWAP and a return to the top of the dragon and a return to the top of the RL10 and then to the top of the PSAR. So those would be 4 checkpoints, excuse me, 4 checkpoints on the way up. And this would be a completely normal sized move because this size of a risk box is 1/10 of the max reasonable intraday trade. And for the guys in the chat room, what is the term that we use that this is the definition of? What is the name of the maximum reasonable intraday trade? It's the range stat. And how do we compute the range stat? Sometimes abbreviated as R stat. It is the average range of the last 30 days plus one standard deviation of that range. That gives us the maximum reasonable intraday move. So when we see this as the low of the day, and we're wondering how high could this price go, we take the average range plus one SD, and that gives us the upper limit. We call that a range stat move. And then this box represents 1/10 of that potential statistically derived move. That gives us the ability to calibrate. So if I take this as my unit of risk, and I see these four price targets, these are all places where I could expect price to stall. And so it's almost 2R to here, to the VWAP. It's another 2R to the top of the dragon, another R to the top of the RL10, and another R to the top here. So this is +6. That size move is 2/3 of the way to the range stack because you have a move off the low of 1, then 1, 2, 3, 4, 5, 6. So total is 7. It could go another 3 of those boxes, which would take it off the top of the screen. That would be a reasonable move. A move larger than that would be unreasonable. So we use that for calibrating the size of potential moves. Now, this also works in the other direction, so that if this is the high of the day, and if this were to fail, I could ask myself, is there room to the downside for this to continue to work? The signal would be a violation of the belly of the RL10, and then what would be the pattern that would give us, if we took that short, what would be the name of that pattern? Yes, a collapsing dragon. And we would use one risk box. And then we could say from the top of the day, a high of the day, there's 1, 2, 3, 4, 5. We've had 5 of these R10 risk boxes from the high of the day, which means there's another 5 to the downside. So if this violates and it moves a full range stack, I'm going to have a 5-to-1 reward to risk. That makes this a valid setup. That after a downward move and a failed rebound, and it breaks to a new low of the day through this statistical support, there's 5 more of those risk boxes to the downside for 1 unit of risk. That gives me a 5-to-1. That gives me a favorable move. That is a tradable strategy. So if the long doesn't work, the short might work. So I don't have a directional bias. There's 7 available this way and 5 that way. I'm indifferent to which one of those happens because all I'm trying to do is get 2. Check or hold. There's my entry. There's my exit. This thing does not follow through. It goes up for a little while and then stalls. And now the Bollinger Band mean is coming down. The VWAP stays right here, but this could not even get to the VWAP. It could not get there. So I'll get out here and I get to make bank on this little slice. With an entry here and an exit here, I'm that much profitable against that much risk. and that looks like about a 0.3 win. Check or hold. It sells off. It finds support at exactly the same level that it found support before. This little support level here is approximately the same place that it finds support here. It did not violate, so we don't get a collapsing dragon. Instead, we get a 1, 2, 3 entry and a PSAR flip. So I just hold my nose, buy it, and now I put my standard risk box. This box is the same size as this box, standard unit of risk. All my upside targets are still the same. It still has to get through this, then the VWAP, then the peak of the dragon, then the peak of the RL10, and then all the way up in here. So all of those are still the signposts for an increasingly successful trade. But first, it has to get through the Bollinger Band mean. And then if it violates below this level, I'm still going to go short because it's still a collapsing dragon. So in its simplest possible terms, this is really just a re-entry of this last trade that paid a little bit. That one fails immediately, so I take a half an hour loss. It does not fail any further, though. And it gives me one more supported spring crossing entry on a crossing of the PSAR. That one works. The 2R battle drill gets me a second position in. This is where it stalls. It does not fail. It holds, and now it gets through the VWAP. And we have 2R in hand, so I add a second position. And I take the exit close to the end of the day in the last 15 minutes of the day. Check or hold. And then the rewards on this one for 1 unit of risk, this one gives me 1, 2, 3, 4, 5, call it 6R on that one. And then this one gives me about 3R. So this leg of the trade is 9R. This one is minus 0.5. This one is plus 0.3. So that just scratches, take one off the top. We net 8 for the day on ETHE and no overnight risk. Check or hold. Hamad does a nice job here on getting 1.2 on the Kiwi. There's more available in there. Good coaching notes. Grinds out micro losses here in Alcoa. I thought this re-entry was well timed after the pinch. I think maybe too much grinding inside here, but it didn't cost us in terms of losses. And the afternoon trades were actually really good. You're playing it only in the direction of the solid move away from the VWAP. So I really like that. I like both of those entries and a great job capturing what was available. This one I thought was late to get in. But I thought this was pretty well done. Grinding in Walmart, we missed the early move. That would have made your day. That one is still in play. Missed the early moves here in AMD. That one's still in play. Take a look at this and see how much of a range stat has already been moved. You did get paid a little bit inside here if you stop and reverse. That would have made a difference in this trade. So we were close to the wins today. Microsoft, this is one that is so actively traded and it's volatile enough that I think we need to be looking for those moves on the breakdown. And then after this move, the double bottom reversal, we could be long here or long here, and then get that trade. And then I think this entry should be taken here where it crosses the VWAP because it's also in the winter and leaving the Red River right at the same time. So you don't know how far down that's going to go, but that's a pretty good short signal right here. When there is a big move down, this does not even get as high as this. So you got lower highs, crossing of the VWAP. That's a great signal. This is Tim. Merck 8R in the usual way, and this is only on a single position. If you added a 2R battle drill here, the place to think about that is right here at the R10 wiggle or that R10 wiggle. Either one of those two, you're still in early days of this trade, and we could have added another 3R on that move. But this was so nice. Merck is definitely in play. When you see that much buying interest and that much punishment on the sell side, this thing is definitely still in play. Now, these standard setups and markings are being done in the sniper layout that these guys have built for TradingView, and they're offering a bundle of that that I've looked at and I can say they've done a great job on that. Ilker, this is painful on this one because under ordinary circumstances you'd make 6R on that one. This one, I think we waited way too long to get out of this. This one did not fail right away. It reversed. Then it gave you this move. We got to be out here at the most. Then if we enter here, we would save 2R on that one. And then we could be long when this crosses the VWAP here. That's still pretty good. And then this one, there was probably 4 to 6R available in here. -1 here. A little slow on the recovery move here. I like the quick exit and then staying out of the chop. I think this one hurts my feelings here. This one failed immediately. It made a lower high and reversed. We should be short, not later than the PSAR crossing right here. We shouldn't be exiting along way down here. We should be exiting up in here when it comes out of the dragon and then short at the PSAR. And then when we miss this collapsing dragon. All right, this is more on Walmart. Late entry in here, still 2.2, but there was another couple R available with the earlier break of this collapsing dragon. That one's in play for tomorrow too. Great work by Kevin here on the stop and reverse. I actually think on this one, I like the breakout, but when this fails right away, I would take the VWAP is Latin for gospel. When that breaks the VWAP, I think you can get out here instead of here, but that's a great reentry. I like the second position in the coverage, although this is probably an exit, sorry. I.e. it could be a second. I like the reentry and great coverage here. That's pretty good work. And that's in Mexico. 1.2 on Devon Energy. You got aligned with the big moves. You didn't stay wrong too long. I'm loving this one. Minus 0.6 on Alcoa. This one, not sure why we got out here, but we could get back in here on a new low of the day and get this move. Question: how would a quick frog short work when the price is so far below the high of the day? Well, you take the high of the day, which is here, and you say, look, what's the size of the move to the downside? A range stat. And if it's only moved one frog box, then there's still 3 frog boxes to the downside. But if the rule is, if it's moved more than 2 frog boxes there's probably not enough room to trade it. You got to decide, are you going to use the frog or the kata? Pick one or the other and stay with it. Don't prioritize them. To me, the kata 2 is the way to trade it, because the frog uses a full frog box if you're following the strict rules. If you're using partial frog boxes, you're already into the kata 2. So the kata 2 has a smaller risk box, and so the move to the edge of the range stat will tell you if you have 2 to 1. So use the kata 2 methodology to determine if there is a 2 to 1 available, and use that as your guide for the pattern. Nice work with Jonathan here. I like the re-entry and the quick cut. This could be your short when it crosses the VWAP. So the place to look for that, again, is so you've had the first big leg down, which creates the condition for the SSC. Good. Now you have a big move down and half a move up, so it makes a lower high. So I still have a downward bias. And I have the extra information that this long trade didn't work. So this exit, so close to the VWAP, could also be a short with a risk box up here. So I could be short here with my risk box this big, and then I get this trade with an exit probably here or here. And I do like that one. So that would add probably another 1.5 on the downside, because you'd end up giving a little bit of that back. Yeah. Great work here on Cat. Gets the short, gets paid, tries the long, covers it. This is where, yeah, exactly where this collapsing dragon could be taken. One of the things that you could notice here is if the market was weak, then this is an attractive move. If the market was in indecision or was up, then waiting for this one is reasonable trade-off. I like the decision that you made, and I like the decision to get out. And then you get I would treat that as a kata too, because it's already past the Bollinger Band mean. The SSC would actually be here, and now you have a low and a higher low. That makes this a kata 2. I like the exit and the quick entry, and that allows you to pick up another half an hour on a move just coming back to the VWAP magnet. So, I mean, that was a master class on how to do it. Really well done. I like you got 2 legs up. Also, the rolling over is available here in this is in Devon. And you can be aggressive and get the 1, 2, 3, that sharp move down, and then the breaking of the VWAP, or the entry when it crosses the Bollinger Band mean, or the entry when it crosses the VWAP. And any one of those entries gets you this whole move. which should get out not later than the spine of the dragon or the skin of the dragon after that move down. And then the reversal up of the RL10. And then that could actually be an SSC on the long side, which would have paid off. So a lot of moving pieces in Devon. A reasonable effort on this move. I think you got to look at NVIDIA as an early mover. It gets massive moves early, so the short side trade was available. I think the collapse here on EWW, that's an indicated stop and reverse, and not later than here. You could still get short here. You could get short here and still get paid. So remember that you measure the move from the top of the day, a range stat to the downside, and that tells you there's still room to the downside for this thing to work. Then there's maybe an SSC late in the day. This is Luke working on his latest idea, a form of visual box trading using a smaller PSAR adjuster. And it is similar to the trades he makes on 3 and 5 minute charts. Looking for the time frame on this. Yeah, these are 15 seconds, I think, actually. So this goes pretty quick. But he's looking for key turning points in the R10, 1, 2, 3 entry, and then a second entry with a risk box off the low. And then he ends up getting a second position in, and that's 8R, 7R out of this move. This is going into the automated, robotically traded system that he's developing for us. More on that for advanced traders to follow. Let's go to the daily report. Stand by. Stupid. All right. Ready? We've got bullish normal, long-term strongly overbought, but some temporary short-term weakness as the market comes off overbought and is decaying a little bit. The volatility is really starting to warn about the downside move with risk off. I want you to notice that on gap downs in the market right now, in the last 30 days, that 8 times when it has gapped down, it has closed lower than the open 8 out of 11 times. And the sell-off is an additional 0.28%, whereas the morning hook, which is a gap down but close higher, has only been returning 0.2. So the gap down, when you look at the payoff, only 3 times out of 11 did it go up, and it gained 0.2, and then 8 times it closed lower for minus 0.3. So on gap downs, it favors the fail. On the gap up, 14 times the gap up has continued to gain for 0.54%. So big gap ups have been predictors of follow through to the upside. Gaps down have been predictors of follow through to the downside. And only 5 times did the gap up reverse, and then the reverse was half the size of the gain. So that gives you a clear indication that the gap behavior is not symmetrical. What's interesting is in the last 30 days, the gap up behavior is the complete opposite of the long-term gap up behavior of the last 200 days. When you look at the last 200 days, the gap downs have reversed more often than they've failed. So that reverses the directionality. So interesting how the truth about the gap changes. All right, let's go to the Dow Tactical. Big breakouts to the upside in Travelers and Walmart. So Walmart is still in play. Have a handful of symbols on the auto framer that test out. We have 15DD in Apple, and it's been a % loser for 10 days and 30 days. So Apple is suffering. It may be ready for a value play. In the ETFs, it was an inside kind of day. A handful test out well, but a lot of dojis. And this is a market that's in waiting and seeing what the U.S. is going to do. Usual suspects on the auto framer. I like the Russell and the mid caps and Microsoft. Should be studying those. A handful of good squeezes, including small caps and mid caps and Brazil. So be ready for that as a breakout, the sign of a potential surprise mover. Summer is still dominating the 4 seasons on both sides, large caps and exchange traded funds, and much more pain and suffering today than there was joy. So the selling is starting to become a little more widespread and fewer symbols leading us higher. But Coke and Walmart are at the top of that list. And still the usual suspects here. Now, I want you to notice that we're seeing clear evidence of the 90 period rolling over. The 30 is already rolled over, and the 10 is back to the Bollinger Band mean right here. So we're seeing definite weakness. This was a day that this should have gone, but it didn't. It came back to the edge of the river, and now we got to be even more concerned about downside selling. All right, that's everything we got for today. We'll get this published and posted. Take good care. See you tomorrow.